Hello, and thank you for joining us on this BFM Market Outlook ramping up in 2020, powered by Eastspring Investments Berhad. I'm Wong, Ning, and I'll be moderating today's session with our panel of experts to discuss what will drive our markets and economy this year. So joining me today are Doreen Choo, Head of Investments at Eastspring Investment Berhad, and Ivy Ng, Head of Malaysia Research and Regional Head of Agribusiness, CGS-CIMB. Now, before we get started, please remember that you can post questions for both Doreen and Ivy, and we might not get to all of them, but we will certainly try. So first off, Doreen, let's start with you. Malaysia ended 2021 once again as one of the worst performing markets in Asia, down 3%. I think we were only beaten by Hong Kong, where the Hang Seng Index fell by 14%. Where did we go wrong?
Thank you, Ning. Coming out of 2020, we were relatively optimistic about 2021. Unfortunately, that optimism quickly faded as we were hit by a series of events, including the MCO 3.0 in the middle of last year, followed by very high COVID cases, which peaked in August, if I recall correctly. And finally, of course, we had the negative surprise of the Cukai Makmur in Budget 2022. So the Cukai Makmur effectively wipes out the corporate earnings growth for this year, leaving us with very flattish to slightly negative earnings growth for 2022. So in addition to that, this Cukai Makmur also signals continued policy risk to investors. But to be fair, Malaysia also did some things well. Of course, we had the record vaccination rollout. We had, we lifted the interstate travel ban in October, and that lifted sentiments on the ground. And of course, the political ceasefire also helped with stability.
Okay, but Ivy, I'm going to pose this question to you because, this underperformance isn't new. I did some analysis on Bloomberg, and honestly, for the last 10 years in US dollar terms, the FBM KLCI was down 10%. The Singapore Straits Times Index up 13%. Jakarta's JCI up 10%. Thailand was up a whopping 53%. Even Hong Kong up 24%. And if we look at a broader benchmark, MSCI Emerging Markets up 33%. So what needs to change before the Malaysian market honestly gets a proper relook?
Yeah, thanks. Good afternoon, everyone. Thanks, Ning, for the question. So I think a couple of things. One has got to do with the corporate earnings growth for Malaysia. I think for several years now, except last year where we benefit from the COVID pandemic, some of the sectors like rubber glove and so forth, I think corporate earnings have been showing a declining trend. And there has been a lot of periods over the last few years where corporate earnings have disappointed. So that's one reason, perhaps why Malaysian market has underperformed. The other one obviously has got to do with the political situation in Malaysia. I think since GE14 in 2018, we have some political instability, and that has led to concern by foreign investors. And we have seen foreign funds outflow from Malaysia. That means there are less liquidity in the Malaysian market, and that partly led to our underperformance, I believe.
Okay, I want to pick up on this foreign outflow. It's true. The foreign weighting now in Malaysia, I think, is all-time low at around 20%. We haven't seen that since maybe 1998, 1997, around that time when we had our own Asian financial crisis. But how do we regain this interest in the Malaysian equity market? And is it a structural issue because of the composition of our market, which tends to be very domestic and almost all economy? We don't have that many technology or internet-related stocks. What do you think, Doreen? How do we get foreign investors interested in Malaysian markets?
You're right. This is a structural issue for fund managers, actually. For active funds, for instance, right? What interesting stocks are there for us to pick? Are there enough choices for investors? You're right that our listed companies are typically more old economy in nature. For instance, we have plantations, we have banks, we have utilities, which mostly use, fossil fuels, for instance, right? And there's only, I believe, one tech company on the KLCI. So we need some names that can resonate with, the new generation of investors. For instance, the millennial investors, right? and they're very passionate about the new economy and the newer trends, the newer mega trends in the market. So I think structurally that is one of the issues that we need to address in order to make our stock market more vibrant.
So, Ivy, when you go marketing, albeit now via Zoom and whatever video portal or online portal, and you've been seeing clients, right, easily, for the last 3-4 years, if not longer, what kind of feedback do you get when you try to market Malaysia or Malaysia Inc.? What's the pushback you get from foreign investors? I'm always curious about that.
Yeah, so in general, I would say that when we market to foreign investors, depending on, we have different type of foreign investors, but some of the question they will ask us is with regards to our political situation, because we get talk about, I think there's been a lot of interest in Malaysia relating to, say, the 1MDB, the political stability, the change in prime minister and so forth. So there'll be a lot of questions asked relating to politics. So I think one of the reasons why investors are not in Malaysia is because it's quite difficult to keep an update on the current political situation. You now have even more parties and so forth. The other angle they are looking at is the ringgit. So if they will ask us what are our view on the exchange rate, they will probably consider coming to Malaysia if ringgit is appreciating relative to the other currencies. So that is one area they look at, because if they want to position themselves in a country where the currency are appreciating like Malaysia, then equity will be one avenue to go in there. But if ringgit is going the reverse, depreciating, then there'll be one reasons why they won't invest in Malaysia, or they would be leaving Malaysia. The third aspect, when they look at Malaysia, also they will ask us what are the interesting growth stocks that offers cheap valuations or unique proposition stocks that Malaysia have that other countries don't have. So for example, I think some of them would be your glove, your palm oil sectors. That would be some of the unique proposition perhaps that Malaysia equity market offers versus some of our peers.
But if we look at the performance of those two sectors you mentioned, the gloves and the palm oil, not very sexy last year. And I think we'll come back and talk about them in a moment. But, let's have a little bit of a look forward and try to kind of get engaged of what do you think 2022 will be like. So, Ivy, CGS-CIMB's FBM KLCI target for year end is 1612 points, correct? But if I look at it compared to where we are currently now, it's probably a 4-5% from current levels, which means that you aren't expecting very much upside. Why?
Okay, I think for one, we do expect challenges for corporate earnings in 2022. We are concerned about, like what Doreen mentioned earlier, additional taxes from budget 2022. We are also concerned about rising operating costs that corporates are currently facing. And we are concerned, whether they are able to pass on this cost to consumer. If not, we could see potential margin compression. That could be another potential earnings risk for corporate Malaysia. Number three, I would say in terms of corporate earnings risk, we are also slightly concerned because today commodity prices, most of them are trading at all-time high. But our view is that there could be a little bit of correction on the commodity price perhaps in the second half of this year. So some of the stocks that be enjoying strong earnings growth may see some downside if commodity price come off. So those are some of the concern. And that's a reason why, we don't have such big upside on KLCI target. The other area to watch out, as we advise investors, would be on the political risks. We could potentially be heading to a potential GE15 this year. So that could lead to some short-term uncertainty again on the Malaysian equity market performance.
All right, I'm going to explore this investment strategy that you should adopt, when it comes to GE15 in a moment. But Doreen, do you share Ivy's perspective that the FBM KLCI will be rather flat? You already highlighted that Cukai Mamuk is going to erode 2022's earnings, right? But in terms of a target, do you think it will be better than last year for the FBM KLCI?
I think I agree with Ivy in terms of the index level returns. I think to actually get beta returns is not going to be easy for 2022 because of the flat to slightly negative corporate earnings growth. However, we look to stock picking at different at the corporate level, we do expect to find opportunities, selective opportunities. So we are still looking at low to mid single digit type of return for this year.
We keep hearing this word, this new word, I call it TINA in investments, which stands for there is no alternative. So if we look at equities as an asset class, is that the TINA trade? Because we are heading towards this environment where globally central banks are tightening. The era of ultra cheap money is coming to an end. And even today, Malaysia is having, the Bank Negara is having their monetary policy meeting over the next 2 days. I think although most people don't expect a rate hike. But cash is trash, they say. So is equities the only place that you're going to get a reasonable return? Is it an asset class that we just can't ignore for the moment? Ivy, what do you think?
Yeah, I think there's always opportunity in equity. So even when in a year when the market may not be doing as well, you have stocks that outperform. I think one has to be very selective in their stock picking. They must understand the company. I would suggest buying into companies that have, are in the right industry, strong management, good ESG, and maybe in 2022 you should pick stocks that have strong pricing power as well, given that we have this rising cost situation around the world. So if you have pricing power, you can sustain your margin, and you will still do well and maybe get better market share within the industry. So I think there's always good stocks to buy. I think we just have to, study them and pick the best of the crop. Yeah.
So it looks like 2022 is the year where I think the buy and the sell side all have to work a little bit harder to generate the returns, right? It's not going to be easy to find the gems in the market. But Doreen, in your conversations with with companies, actually with corporates, do they give you a sense that they expect 2022 to be a better year? Are they feeling this margin compression and the effects of inflation? Although officially our CPI is only supposed to be 2% for 2022 or thereabouts.
Well, they do. Actually, the feedback is that, they're feeling this rising cost and the impact is clearly, margin compression. So it depends on how much they can take before they need to pass it on. I think you've seen in the news reports on, certain consumer companies indicating that they will increase their selling prices in order to pass on the cost pressures. So I think we're going to see more and more of this in 2022.
Now, you've just joined us. Today's BFM webinar is actually our biannual market outlook entitled Ramping Up in 2022. It's powered by Eastspring Investments Berhad. I'm Wong Ning with our panel of experts to discuss what will drive our markets and economy this year. With me is Doreen Choo, Head of Investments at Eastspring Investment Berhad, and Ivy Ng, who's the Head of Malaysia Research and Regional Head of Agribusiness at CGS-CIMB. Now, we would really like to know what's puzzling you when it comes to markets. So post all your questions. Let us know what you think, and we will try to answer them. Now, I'm going back to you, Ivy, and you gave us some tips in terms of how we should approach 2022, reminding us that, okay, you need to do a bit of homework because it's not going to be a case where the FBM KLCI is going to see a wonderful return and you can just buy the index. Now, what kind of investment strategy should we adopt? I mean, I know that CGS-CIMB has got six or seven investment teams that you're proposing, but I want to focus on one of them because today is the monetary policy meeting at Bank Negara. Now, assuming we get an OPR hike, currently OPR is at all-time low 1.75%. Now, who could benefit from a hike if it happens, actually?
Yeah. Okay, thanks, Ning. So we have six thematic that we offer to our investors for 2022, and the first one is position into stocks that are likely to see are likely to benefit from the OPR rate hike that we are projecting for Malaysia, and our economist is projecting 25 basis point hike in OPR for 2022, and most likely all of them will come in the second half this year. Now, banks would be a key beneficiary of this, so we have an overweight call on the banking sectors. I think some of the major banks, I think we like them. Hong Leong Bank, Maybank, Public Bank, RHB Bank would be some of the banks that our analysts like within the banking sector space, and those will be a beneficiary of OPR rate hike.
Do you still think the banks are a barometer of economic growth? Because I'll put it this way. Last year, GDP was not bad. I mean, it was like 5-6% if I try to remember the top of my head. And even this year, it's going to be estimated to be, no, last year was 3 to 4%. This year is supposed to be 6%. I think I see consensus on Bloomberg thereabouts. Do you think the banks can actually give you this kind of returns? Because for me, my concern is a little bit in terms of asset quality and loans growth, right? So Doreen, are you positive as Ivy is?
Yes, generally we like the banking space. We think that it will benefit from this whole economic reopening and normalization process. And we also think that, the banks have actually preemptively make a lot of provisions last year. So they are in a position of strength to actually meet whatever challenges there are for this year. And in the rising interest rate environment, clearly, we are looking at NIM expansion. So banks will be a beneficiary to some extent in 2022.
And NIMS here, you refer to net interest margin. Okay, we've got a question from Abby, which is somewhat related to the OPR, but I think it's more a global question. Now, it's, of course, the Fed, I think, and everyone's anticipating at least 3 rate hikes, if not 4 now. How do you see this impacting the market post? Because has it already been priced in?
Yeah, maybe I can take this.
Yeah, or Doreen, please.
I think the market is currently pricing in about, I think, maybe 3 to 4 interest rate hikes in the US. The impact of this is, the interest rate differential between the US interest rates and the rest of the world, right, will basically increase. So in that sense, right, it will then attract capital flows into the US. So then we have to look at what the impact will be on our currencies.
So, Ivy, does CGS-CIMB worry about this in terms of the impact of outflows, especially on the ringgit? Because you highlighted that's one of the reasons why foreigners haven't been given us a good look in the last, 10 years. Do you think as the positive carry trade narrows, we might be disadvantaged?
Yeah, I think definitely. I think if you look at the past US taper, we do see foreign funds outflow. So we think that there is that possibility that this time around we could see a little bit of foreign fund outflow. But I think what is different, in the last taper versus today is that our foreign shareholding level in Malaysia is very low. It's at 20.4%. It's near its low since global financial crisis. So I think that foreigners have been selling quite a bit. I think the biggest net sell in recent years would be last year during the COVID period. So with foreign funds having less exposure in Malaysia, the outflow would be less as well. So one of the things we do advise our investors to look at is to look at some of the main stocks that foreign investors have been positioning in Malaysia last year, and suggesting to our clients that perhaps they could be selling this stock in the event they leave the Malaysian market. So so that is probably how we would advise our investors to look at in terms of foreign fund outflows and how the Fed rate hike will impact our Malaysian market.
Now, we've got a question from Wee Boon, which is also something I was just going to ask you, how much does the political uncertainty factor into the markets for this year? And will it, how do we position for a general elections? And is there actually even a trend? If I look back, I can see some years index goes up, some years index goes down when an election is called. What do you suggest, Doreen? What's the best way?
I mean, I'm no political expert, but I don't think that there is a common trend for market behavior in an election year. But generally, as volatility increases in an election year, we tend to take cover in terms of portfolio strategy. We tend to go a bit more defensive. And how we do that is we try to reduce our exposure to companies with government links, for instance. We try to look at companies that export to other countries, for instance, that derive their income from outside of Malaysia, for instance. So I think politics does weigh quite heavily on the Malaysian market. It is an overhang, and the sooner we get past it, the better. I think then we can focus on the hard issues. Looking at real policies and tackling the real issues. I think for investors, I can say that we are quite tired of all this political noise, I have to say, right? So I think we have to focus on moving the country forward.
Yeah, I get you. The political fatigue is real. But Ivy, could this then be one way, or at least one investment team of yours, which is to look at higher dividend yield stocks? Is this a way to overcome perhaps some of the uncertainty that might come with the general elections? Do you suggest looking at stocks that give you good dividends then?
Yes, so high dividend yield stock would be one of our thematic for 2022, and why we do ask investors to take a look at those themes is because we feel that if a stock offers high dividend yield, it can uh, perhaps act as a support for the share price of the stock in times of uncertainty, especially if they offer like 6-7% yield. So um, that would be one area to position, apart from like what Doreen say, position into stocks that will not be affected by local policies. So any change in government are unlikely to affect the business or the performance of the stock in the near term. So that would be another way to kind of not be too exposed to a GE risk, I would say. But in terms of whether the market is pricing political uncertainty, I do think so. Yes, a little bit. But then whether market will price in more depends on how the political landscape change in Malaysia. But whether it's better we hold GE15 in first half or second half, I think really what investors are looking for is that whether GE15 will resolve the current instability or uncertainty we are facing on the political front in Malaysia, whether policies will be more certain going forward and will be carried out, and investors will be looking at those points post GE15 to see whether they should position more into the market or not.
Well, we have an interesting perspective from Steve, who basically put it, nicely in saying that, why be so anxious about GE15, and perhaps even if the market corrects, the idea is to actually then pick up the bargains that you see, and especially if you have the holding power to do so. So of course goes back to what you were saying, Ivy, right? Know the fundamentals, like the company, know about the company, do your homework. And if there's any sudden price drop, pick it up. Is that the way to go, Ivy? Actually, the smart way to invest?
Yeah, definitely. I think investors need to understand what they invest in, and they must have confidence in the management and the business model and the future prospect of the industry that the business are involved in. So, of course, you don't want to be buying, although it's a good company, but they are in a sector that are facing huge disruption, perhaps, like some of the sectors we've seen in recent years, or in a sector where there's an oversupply of capacity. So you could be buying cheap, but it may remain cheap for a while because the fundamental of the industry are still not picking up, right? Like some of the industry, they are suffering from overcapacity, oversupply, that kind of stuff.
Do you think gloves falls into what you've just described? I'm going to pose this question to Doreen, though. Because is there the worry that gloves is the value trap? You look at it, it's cheap compared to what it was 2 years ago. And but at the same time, capacity is being ramped up, and I think everyone's a little bit concerned about China starting to come into the markets quite significantly. Would it be, even though it's cheap, are gloves a value trap?
Yeah, we're not so keen on gloves yet at this point in time. We still see the ASPs, the selling prices coming off this year. It hasn't quite bottomed yet. And in terms of capacity expansion, I think some of the capacity expansion of the local glove manufacturers have been scaled back, or at least there are plans to actually cut down on the expansion locally. And utilization, I think for some of these companies average between 60 to 70%, which is really below what they normally operate at, So I think there are still some challenges amongst the glove players.
Okay, if you just joined us, today's BFM webinar is our biannual market outlook ramping up in 2022, powered by Eastspring's Investment Berhad. I'm Wong Ning with our panel of experts to discuss what will be driving our markets and economy this year. Joining me is, of course, Doreen Choo, Head of Investments at Eastspring's Investment Berhad, and Ivy Ng, Head of Malaysia Research at CGS-CIMB. Now, we would really like to know what's on your mind. Please post your questions. Ivy, Steve just wrote in the minute I said post your questions. He wants to know about gaming and banking stocks. You mentioned banking stocks about it being a beneficiary of the OPR hike. But what about gaming in the sense that it's a recovery play, right? Do you see it a better 2022 this year?
Yeah, definitely. I think our gaming analyst is quite positive on the sector because I think if you look back at 2021, we have several lockdowns, and I think the NFO's outlets were closed. I think during the interstate travel ban, Genting had to close for a couple of days or weeks as well. So I think all these are slowly coming back. I think people, you've seen all the NFO outlets have reopened and so forth. So definitely we have more business days in 2022 that should leave earnings. On top of that, people are also starting to travel, and there could be pent-up demand perhaps in the early part of the reopening. So we could see all that benefits this year.
Yeah, and iChan posted a question about ESG investments, which I wanted to ask you, Doreen. I would assume this is probably the investment mandate that has seen the highest inflow from your clients. But what do you say to those who don't believe it, who say, oh, fund managers, they're just greenwashing. They're just doing what they need to do, but, really, they're not really practicing any ESG.
Okay, this is a very interesting question. In short, right, ESG is here to stay. It is not a fad. And in time, it will be a baseline requirement for all investments. And if investors don't take that into consideration, if they exclude material ESG factors, that could lead to valuation discounts, right, for their portfolios. So I think, that ESG is basically a mega trend. It is not a fad. So it is a new driver of the market. Maybe I can just take this time to share a little bit about how Eastspring approaches ESG, right? So I think if you can see, in my background, experts in Asia invested in your future, that is our purpose statement. So clearly what is, implicit in our purpose statement is sustainability, because to be invested in your future, technically speaking, you need to be invested in the longer term, right? So it is implicit in our purpose statement. And traditionally, I think a lot of investors have focused on the G pillar, governance, but more and more E and S, environmental as well as social factors are featuring more and more in our investment process. So, but we have to be cognizant of the fact that this is something new to all of us, whether it's asset managers or asset owners or the companies themselves or even the regulators. We are all trying to go up the steep learning curve, trying to understand, how we can actually better equip ourselves, train ourselves up to actually, do better in this area. There are various approaches to ESG, right? We can actually be inclusive and go the collaborative engagement route. What that means is that we will engage with our investee companies, talk to them, and try to influence them in terms of their transition plan, to be inclusive and to partner them in their transition. But having said that, it also depends on our clients' requirements, on the fund objectives. Some of them require outright exclusion. So then we practice that. So I think it's a bit too early, to call some of these efforts greenwashing, because it really comes down to understanding what the different approaches are and whether you want to be a shareholder and an active shareholder to remain in that whole transition process, or you want to just basically pull the trigger and say, see you later when you have turned green, So it really depends on the different approaches.
Well, we did see that. We did see the power of asset managers or professional institutional investors when they decide, okay, this stock's not for me. too many question marks about their ESG practices, and you can see the share price collapse, especially in the last few months. But Ivy, is there sufficient investment universe for ESG names in Malaysia? Like, how many under your coverage meet this criteria? And especially after we've heard all this negative news from some of the glove makers or even some of the technology names.
Yeah, I think when we look at stocks and stocks that we like, ESG is one of the criteria, but not the only criteria. So you must have I
Hello,
think in
Ivy.
our view, we would prefer stocks with total package.
Mm.
Yeah, can you hear me?
Yes, we can hear you
Yeah,
loud and
okay.
clear.
I
Please
think
continue.
okay. Yeah. So I would say that for us, it's not just ESG alone, buy a stock because, yeah, strong ESG, but you also must have strong fundamental valuation, must be right, and so forth. So that would be the full package in our view. So I would say that it's all a relative game for ESG in Malaysia. So there are some companies that do ESG very well and articulate it very well. So to us, to some extent, is how well management articulate. And I think we are still in perhaps early days ESG. I think we have to track. One thing is telling us what is your ESG target, but the other thing is tracking and making sure that you meet all those targets and they're just not targets only, right?
Okay, so you're the regional head of agribusiness at CGS-CIMB, which means you cover all the plantation stocks. Now, lots of question marks about their ESG practices, and in your conversation with both fund managers and also with the companies themselves, are these companies making any headway? Is it possible, or is it's just a contradiction that cannot be resolved?
No, I believe, I've been looking at the industry for many years now. I believe that over the last few years, we have seen improved transparency for the agribusiness company. They continue to improve their transparency year after year. Some improve it, much at a much faster rate than others. So definitely transparency have improved. But with regards to the allegation of forced labor and so forth, I think what all of these companies are trying to do, those that are affected, they're getting in external audit and they're working through some of the issues that the U.S. Custom Borders Patrol may have, and trying to cover those gaps. So I believe that it's just a matter of time. I believe they can resolve this issue, but they just need to be, consistent and persistent in their pursuit to achieve this goal.
Yeah, because when I look at the performance of the FBM plantation index versus how well CPO did last year, there's a huge gap. In fact, the plantation index underperformed significantly. Do you think that gap can ever be narrowed? What will convince investors to think, okay, this is the time to narrow that gap? Or is this arbitrage opportunity something that investors are not prepared to consider at all? I mean, when will be that tipping point, if at all it happens?
Yeah, I think there are two parts to why plantation sector didn't do well. One, of course, a lot of people just look at it from an ESG perspective, because what we have noticed is that foreign investors have been exiting the sector. So you have perhaps, in a situation where there's ESG, a lot of the funds who have to meet certain ESG criteria, they've decided that plantation don't meet it, and then they've decided to exit the sector. So you have less liquidity in the plantation sector. That's one. But perhaps the one that less talk about also is the fact that the plantation sector in Malaysia are facing labor shortages issues. Their productivity have dropped. Their costs have gone up. I think if you've spoken to some of the plantation this year, they have new challenges in terms of higher fertilizer costs, shortages of fertilizer, and so forth. So and there's not much growth for the sector if you're not able to expand, because you got all these ESG issues as well and got labor issues. So I think that's the other concern as well, whether medium to long term will the sector still continue to see grow, especially if costs are rising.
Now, Doreen, there's this other theory that I keep hearing, or well, not theory, this investment proposition that's been happening since the beginning of the year. Of course, driven, I think, a lot by these impending Fed rate hikes. And this is the shift towards looking at value and maybe even laggards after growth stocks have been like the big winners for the last few years. Is this something you're considering? Is it time to relook at all these value plays?
We try not to, strategize in terms of value versus growth. I guess the key takeaway here is that as long as we see growth in the earnings of the companies, then we would be interested in those companies, because growth is really a scarcity at this point in time. So if I were to basically categorize it as such for the purposes of answering this question, we are looking at a reopening, right? A progressive reopening this year. So that would then mean that, cyclicals and value plays will come in, right? After the growth, names such as the high valuation tech sector and things like that, have done so well, especially in a rising interest rate environment. I guess the impact would be felt more in the names that have actually gone up substantially. Having said that, we do believe in what I call adopting a barbell kind of approach, having a foot in each, diversify. So we think that yes, reopening will take place, right, progressively. It has been delayed, admittedly, right, but it will take place. Not in a smooth line. There will be episodes of risk aversion. But at the same time, for growth stocks, we are still looking into those names because of their robust fundamentals. So we think that, for tech, for instance, in Malaysia, right? I mean, it's gone up substantially. What is I can't recall what the latest PE valuation is. And at some point in time, I think it was like 50 times or something like that, So, but it is supported by capacity expansion. I think they're entering another cycle of capex, right? Capex growth. And the demand coming from their customers are actually continuing to, be strong, So we wouldn't exit at this point, if you know what I mean.
Okay.
If you're already in there, then hold on to it for now. I mean, that's our general view, having a diversified and balanced kind of a strategy for 2022.
Related to this, because we've got a question from Rafael. I mean, she highlights what's happening, what we see in the NASDAQ, right? On a year-to-date basis, is down more than 10%. And you can see tech being sold off. They were like the big winners last year. And also they had the growth theme. Doreen, you're not worried that Malaysia will mirror this? Because like you say, valuations aren't cheap. You're right. The valuations are easily on a sectoral basis, 40, 50 times PE.
Yeah, I think it will be volatile. Definitely. When something happens on the Nasdaq, I think investors here in Malaysia will react accordingly. But I think what we need to look at is have a more balanced view. We go back to fundamentals. We go back to future earnings. Things like that. As long as there is growth and is supported by incoming earnings, then we still continue to like it. Yeah.
So it's still a more bottom-up approach when you look at things rather than a thematic basis, right? Am I correct?
Yes, that's right.
Now, Ivy, tell me about CGS-CIMB's top 3 picks. Okay, your report says so. Why? Why do you pick these 3 names?
Yeah, so I think we pick a bank, which is Hong Leong Bank, and that is for exposure to the rate hike, like we discussed earlier. We also pick a tech names because we are looking for a growth stocks, and I think tech will continue to be showing growth in the next 1 to 2 years in the right industry and so forth. So the third stock is actually a consumer name. So QLEL Resources, because we think that there will be pent-up demand, for consumer spending in the first half, at least in the first half of the year, with reopening and so forth. And I think QL Resources, the share price have come off, so I think there's an opportunity to buy the stock at lower valuations as well.
Okay, so it's a combination of different companies from different sectors. But I want to spend a little bit on QL Resources. Okay, that's quite an interesting pick because it's almost like I would say a food FMCG plantation conglomerate. They have a bit of everything, but valuations there aren't cheap at all. That's the hurdle I have when I look at this stock. Right, it's like what 20, 30 times PE.
Yeah, I think more like 30 odd times PE. But I think that's one of the reasons. I think at one point of time we don't have an ad call on the stock, but I think it has come off from its peak by I think around 20%. So I think there's a good opportunity to pick up. I do like the family mart business, I think there's good potential. It may not show the full potential of its earnings yet at this juncture, but I think with people going back to work and so forth, a lot of these convenience stores are likely to see higher traffic, higher profitability, and that's one of the potential upside perhaps for QL Resources for 2022, the reopening as well, play on some of these convenience stores.
Okay, and I got this interesting question from Shaz, and maybe this is directed at you, Doreen. In your conversations with clients, do they ever say, "Hey, Doreen, what about crypto investments? How is this something I should consider?" What is your response to that? Or at this moment, like for me, I would admit I'm a bit wary of it because I don't know how to do a valuation of it.
Yeah, I mean, so far, none of our clients have actually asked me about crypto
Okay.
investment. Okay, so I think it's probably a bit too funky for them, based on their investment requirements. The risk reward, I think, may not actually fit their profile or their requirement. So I've got nothing much to say about crypto.
What about you? Ivy, do clients ask you about this at all? Is this something that you think will increasingly almost, I suppose, be parallel with equity investments? People will consider it more and more as an alternative asset class. Because, for example, we always think like gold is a hedge against inflation, right? But last year, gold was a disaster, despite the fact that it's supposed to be an inflationary period. It actually, prices didn't go anywhere. So, do you think that this, cryptocurrencies or digital coins are going to overtake gold, for example?
I'm not sure about overtaking the other asset class, but we do run a survey every year with retail clients and ask them, what are their preferred asset allocation and so forth. And we do see crypto investment as some of the, the kind of asset class.
Oh, I do think that Ivy has frozen. So much for
I've seen an increase. So
technology. Okay,
I would
Ivy, we can hear you. Sorry.
Yeah, so what I'm suggesting is that I think retail investors are looking at it. So it could be a competition, for their money, where they should allocate their investment between equity, perhaps, and other asset class and crypto. Crypto is something that retail clients are looking at closely.
Okay. Now, ladies, both of you are pretty optimistic about the banking sector. So I've just got one last question. And that is because Bank Negara is also expected to issue the 5 digital banking licenses very soon. Do you think at all it's going to be a disruption to banking earnings, or the incumbents can hang on to their market share and their superior margins? What do you think, Doreen?
I think for a start, it's probably going to be very small. We're not expecting a massive impact on the incumbent banks. But having said that, I think the incumbents are also aware of the incoming challenges from this space. So they are also innovating, trying to keep up with the changes so that they don't lose out too much.
Finally, you, Ivy, or you have a final say? Are you worried about digital banks in terms of the impact it'll have on the bank's earnings?
Yeah, I think first thing I would like to see is who are the winners of the banking license, number
All
one.
of us would, I think.
And
We're probably
then
guessing.
and then what kind of products are they planning to offer to the market? And I think depending on the attractiveness of their products, then we can then assess better how this will impact the banks. But definitely, I would say it's good for a consumer. So I think it's also something that we cannot avoid. Every sectors are facing disruption. So yeah.
Yeah. I guess it's also maybe just choosing the sectors that aren't going to be so disrupted, or at least have a killer application, something superior. Like you say, choose the companies with good pricing power, good management, do your homework. And even though maybe the FBM KLCI might be flat for the year, there are still gems to be found, right, ladies?
Yes,
Yep, definitely.
On that note, thank you very much for your time. Helping me to make this an enjoyable discussion was Doreen Choo, Head of Investments at Eastspring Investment Berhad, and Ivy Ng, Head of Malaysia Research and Regional Head of Agribusiness, CGS-CIMB. Now, we do have a feedback form. It's posted in the comment section. Please help us to fill it in so that we can improve better. It's only 5 questions. But in the meantime, this BFM Market Outlook webinar is powered by Eastspring's Investment Berhad.